Over the years in self-storage, we've talked about creative financing, seller carry, wraparound mortgages, mezz debt, bridge loans, JV deals, master lease options, and they're all trying to solve one problem. You don't have enough money. But there's one tool that's always been there. It gets talked about sometimes negatively, sometimes almost mysteriously, as if we all know it exists, but we dare not go near it. And yet it solves the same problem that all those creative options solve without a bunch of complex legal documents and high-powered attorneys and hidden risks. It lets you get into deals with 10% down. It lets you spread whatever capital you have across multiple deals. It lets you finance your expansion without going back to the well or using any of the aforementioned creative financing tools. And it's been sitting right here in front of us this whole time. Folks, I'm talking about the SBA. The SBA is creative financing. It just doesn't get all the street cred. Today, I want to dive into this incredible, I don't have a ton of money solution, AKA the SBA, and in particular, highlight what an amazing and often overlooked tool it is for the self-storage industry. So for today's guest, I brought in someone who's going to change how you think about financing your next deal, whether it's your first one or your 15th. Now, it could read you Anne's bio: senior loan officer, Live Oak Bank, extensive experience in commercial lending, risk assessment, relation management, Bachelor of Arts from James Madison University, yada, yada, yada. And you'd nod and politely zone out for 30 seconds. So let me skip to the part that matters. Our guest today, Anne Mino, sits on Live Oak Bank's self-storage lending team, a team that has done more self-storage loans by dollar volume than any SBA lender in the country. And she's not just a lender. She's a self-storage investor herself. She's skin in the game. So when she's underwriting and understanding your deal, she's not just looking at it as a banker. She's looking at it as someone who has her own money in this asset class and understands what it takes to make a storage investment pencil. And Mino, what an honor and privilege it is to have you today on the Self-Storage Investing Podcast. Welcome.
Hello. Thank you. Thank you for the intro. It's great to be here.
Did I prop you up enough there? Did I give you all the cred that you deserve?
That was
Because
fantastic.
I know Live
Loved
Oak
every
is
minute.
the largest lender in the country, right? The number one lender in the country for self-storage loans.
By dollar
Correct?
volume. Yes.
By dollar volume. Cool.
Yes.
And for the folks listening who understand conventional financing, they've talked to a bank, they get the concept, they've maybe borrowed for their house, right? Give us the 60-second version of what the SBA lending is and how it's different than conventional.
Sure. SBA loans in general it's a government guaranteed program. So the government's guaranteeing a portion of the debt. It's a very large portion of the debt most of the time. And it allows banks to do loans that other conventional lenders are not going to do. So you already mentioned 10% equity injection. Typical conventional bank is going to ask for anywhere from 25 to 35, sometimes 40% down. So this is the number one shining star of SBA is 10% down, sometimes 15, sometimes 0. That's the number one differentiator. And then number two differentiator is experience. Conventional lender is going to want you to have experience in the business. They're going to want to see a track record that you know what you're doing running this business. And SBA allows us to do loans for people that don't have experience, which is huge.
Oh, we're gonna come back to that in a second. So when we're talking about self-storage specifically, and what do these loans actually look like? Are we talking acquisitions, construction? What's the menu of items available to us in self-storage?
Good question. So really sky's the limit. We can do everything. We do acquisition, we do ground up construction, we do expansion lending, we do boat and RV, anything storage related, you name it, we can do it. We can build it.
And you said we were looking at 90% loan to value on acquisitions.
Yes.
I read somewhere, I think, in construction up to is it 14.5 million? Is that right?
Yes. Typically SBA loans, largest project size, maybe 14.5 million. Live Oak will let me go a little bit higher than that, actually. And typical down payment for that is 15%. So you put in 15, we're going to do the balance of it. SBA is going to guarantee a portion of it.
So 10% on maybe the value add, maybe expansion, I'm not sure, or if expansion falls into the 15%.
Yes, it's really your equity injection is determined by the loan size. So anything over 5 million, we're going to be in a 504 program. That's going to have a 15% equity injection unless you already own storage, and then that even can come down to 10. So there's some rules and regs there that we the educated lender is going to pay attention to. And then, of course, it's a debt service coverage loan. So the leverage also depends on how much debt the facility can support.
Okay, but I don't need to know all that as a borrower because I've got you. I just come to you, and you can steer me whether it's 7A, 504. Those are details that are unimportant in this moment, I think, right?
That's right.
So
Yes.
let's unpack some of this though. So starting with because I want to start with I think the person that needs to hear this the most is the first time buyer. They're listening right now. Maybe they've been to an event or two about self storage. Maybe they've been watching my Storage 100 series on YouTube. Maybe they've analyzed some deals and they're sitting on the sideline because they're convinced no lender is going to take them seriously. They've got no experience. They've never owned a storage facility. Maybe they're a W 2 employee or they have W 2 like income, right? Just regular recurring income every month. They make a decent living, whatever that means. And can that person actually get an SBA loan?
Absolutely. You take it all. We are looking at historical cash flow coming into your home. Does not have to be W 2 income, does not have to be 1099. We're used to working with real estate investors, non real estate investors. You can be retired and have pension income. And if you are independently wealthy and have no income, and we can see there's enough capital there to get us comfortable that's sitting, in a stock account or in a trust or something like that, that can make us comfortable as well.
Okay, I hear this a lot. As you know, we coach and mentor and train a lot of students, and they're all first time buyers. And the thing I hear constantly from them, directed at me or Jack or whoever's on my team, is, "Well, sure, you guys can get financing because you bought 20 facilities. What about me?" How do you answer that? Because so you've said yes, as long as you have income, or actually, you just give a scenario where you don't even need income. But I've never bought one before. I don't have experience. How do I qualify?
Yeah, good questions. This is really important for people to understand. When a bank is qualifying a deal, we are looking at 50% of our decision is you as a loan candidate. Do we feel you have the eye of the tiger? Do we feel you're going to pay us back? Are you over levered personally? Or we feel like you have the right amount of debt and right amount of assets that you're a good loan candidate? And then 50% of our decision is, does this facility actually pay us back? Where does experience come into this? There's a lot of really good self storage education materials out there. I encourage everybody to educate themselves as much as they can. I do want you to underwrite the deal yourself. I want you to come to me with your underwriting and tell me what you're planning on doing with this facility and how you're going to do it. So, for my first time buyers, your business plan is really important. And I offer a lot of resources because I don't think that's everybody's best. That's not the thing that they do the best, myself included, when I had to do it many, many years ago. So, I give out resources, but we want to know that you have a really good understanding of what you're buying. And then we want to know that you have a really good understanding of how you're going to be successful running it. Doesn't take self storage experience. And this is something my company does lending to all sorts of industries. And the no experience is a unique part of self storage lending because, quite frankly, it's not hard to run, right? You put some processes in place. One could argue that it's pretty simple to get tenants in, to retain your tenants. I'll tell
I'm
you
going to
this, it's a
defer.
lot easier than multifamily.
I'm going to defer that it's still a business, but I am picking up what you're putting down, and that yes, it's not the most complicated business to run. But you've said some things in the last two answers you've given that I want to make sure that the listener understands. And I'm going to say it out loud so that I make sure I understand. So you tell me if I'm wrong, because this sounds like something that's should blow everybody's mind. So, and you and I were talking recently about this. The SBA, is this true or false? The SBA doesn't care how much you make or where it comes from as long as it's legal, I'm assuming.
Good
It
distinction.
sounds like they care more about this. So on the personal side, not the business side, because
Mhm.
you said it was almost 50-50. Did I hear that? 50 the business,
Where
50%
the
you?
bank is looking at each deal, 50% guarantor strength, 50% deal strength.
Okay. So
It's an equal, we care about both.
let's assume the deal checks out. The deal's perfect. Okay.
Hmm. Hmm.
So we're just looking at the 50% guarantor side now. This is the part that I think is what people need to lean into and listen to. So they don't care. I'll say it again. They don't care how much you make.
Correct?
They care about how you manage it. So I'm going to give you an example. You said correct to that, right? I'm
Yes,
going to give
with
you an
some
example.
caveats, but I think we're going to work
Okay.
with
All right.
caveats.
Yeah. Okay. So, because I ran the numbers on this, and I want you to tell me if this is technically true,
Oh, now you're going to hold
right?
my feet to the fire.
Well, I'm not going to hold your feet to the fire. I'm going to give you plenty of room to kind of talk about how there's plenty of dials and knobs and levers to turn here, or whatever. But could they land on this scenario, right? Because this is what blows my mind. A person earning $80,000 a year, if what you said is true, this scenario could exist.
Mhm.
Person earning $80,000 a year could potentially, there's your out, qualify for $1 million acquisition, which, if you've been listening so far, if I put 10% down, that means it's a $900,000 SBA loan. And I'm gonna use an interest rate that in my scenario, it works. All right. So suspend disbelief, which is not far off from probably a real scenario. So let's put the interest rate at 7.5%. So I've got an SBA loan, $900,000 loan at 7.5%.
Mhm.
That's a 20-year term,
25.
25-year term, I mean,
Fully
which is
amortizing, no
right,
balloon
fully
payment.
amortizing. Perfect. Because that means then my principal and interest payment on that $900,000 loan at 7.5% is $6,650 a month, which annualized is right around $80,000 a year.
Mhm.
Now, if I made $80,000 a year and I could not buy a house to live in where the debt service was $80,000 a year,
That's right.
but you're telling me, again, in my perfect scenario there, and you can have all the outs you want,
Mhm.
I in that scenario, I could qualify to buy that facility with an $80,000 income and an $80,000 debt service.
Absolutely. All day long, we do it every day.
I still don't believe it.
So the key
It's
distinction
mind
here
blowing.
the key distinction is when we're evaluating, like I said, it's 50% the facility, it's 50% you personally. When I'm evaluating the facility, I want to make sure that I'm not saddling you with so much debt that this facility can't pay back the debt. And also, guess what? I'm not expecting you to pay back this debt out of your pocket. I will actually want the business to pay it back. If there's a personal guarantee, so you do have to pay it back personally if the facility, for some reason doesn't perform the way you believe it's going to perform. It's storage, so you know, we're going to come in and help you if you haven't been able to figure it out. On the personal side, your actual income doesn't really have a bearing on how much money you can borrow. What I care about, what a bank cares about is that you can meet your own personal debt obligations, put food on the table and gas in the car. So I'm
And that's
looking at
the managing my debt responsibly, and that's
It's
what that means is
managing your debt. You got it. It's like, what is your credit report? How long have you been working? How many years? We typically look for 3 years of personal tax returns to see a recurring income number. Your income can be lumpy. A lot of real estate agents, for example, they have a good year, they have a bad year, maybe they have 2 bad years and 1 good year. I'm looking at trends and then I'm looking at debt. If
so
you come to
you're
me and you have a huge salary, but you also own a vacation home, a regular home, a boat, an RV, student debt, credit card debt, everything under the sun, then we're going to have a harder, more difficult conversation.
that's so fascinating. So someone who makes a lot of money but doesn't in that regard, you're basically saying doesn't manage it responsibly, meaning they have high debt to income ratios,
Yes.
is maybe less of a
Weaker candidates.
weaker, or is it weaker? I don't want to use the wrong words. Weaker
Yeah.
candidate than somebody who makes less money but has a demonstrated track record of managing it well.
Being
It's almost like
responsible.
you're profiling me. I'll make it me. It's almost like you're profiling me as in how I carry my affairs of life to
Yes.
determine whether or not I'm going to be a good borrower. And then I get the green check mark there. And then it's about the facility because the facility is really what's going to pay you back, not me.
That's right.
Is that
Exactly. But on the
that's
personal
still
side, we're looking at, can they pay it back? Will they pay it back? Right. So I get nervous if you've already taken everything you have and borrowed against it.
well, and that's my point. folks, I used the $80,000. The way I backed into that whole example was I just wanted to use $1 million purchase, right?
Hmm.
And I backed into the debt service and said, okay, that's 80 grand a year. Could someone making 80 grand a year buy this? And the answer is yes, if they look great in your profile, how you assess them. The reality is most of the students we talk to and people listening make a lot more than that, but don't
Some make less.
realize, okay, fair point. But plenty make that or more and still don't think they qualify for an SBA loan. And that's why I wanted to use an under
Gotcha.
$100,000 income scenario to say,
Yes.
folks, if you're listening, this is not off the table for you. This is
Not
if
at
you
all.
are a responsible manager of your financial affairs, what I just heard from Ann is bring me your loan and we'll
Yes.
get it done for you as long as it's a great deal.
Absolutely. And cash is
Incredible.
king. We want to see that you have the ability to save what you make. So that's where the debt comes in. If you're a low debt person, no matter what your income is, but you've been able to save money, squirrel it away in checking, savings, and stock accounts, and or buy real estate with it. If I can see where that money's gone, that looks like responsible money management. That is responsible money management. Cash is important in these transactions. We want to see that you've got your equity injection to put into it. Even though it's low, you still have to come up with it. And then we want to see some cash left. I don't want to take everything you have. So you can use a home equity line of credit to come up with your equity injection as long as it doesn't push you over your ski tips in debt.
Everything just
But I
points
still
back to
want to see
being
cash.
responsible. It all just points back to being responsible. It's so I don't think we ever no, this is like eye-opening for me because I don't think in all of the circles I travel in, and I'm usually talking about how you should look at the SBA, I never talk about the SBA in this way. I never thought about it in that way. So this has already been an
Money's
amazing interview. But
here for everybody. And I will say the program was put in place to put money in the hands of people that couldn't walk into a traditional bank and put 30 to 40% down. That is exactly what the SBA is here for. And the fact that my bank enables me to do it the best,
it's
I've
really
been
incredible.
I'm very proud of my company.
It's an incredible tool, and this is one of the things when I go on other podcasts as a guest, I talk about the SBA, although we just drilled down further than I ever have. I always talk about it as an incredible tool for someone getting into real estate for the first time,
Mhm.
or for going from the 2, 3, 4, 5 single families to or 10 single family rentals to try to elevate to the next, step. Usually they go multifamily, but the
Yeah.
SBA allows you to go storage and get into commercial because you can't use it for multifamily.
So do you want me to tell you something else that's going to blow your mind?
I'm not sure I can handle all this in one podcast, but go ahead.
Since we're talking about qualifying for a loan, it is as easy to qualify for a construction loan as it is to qualify for an acquisition loan.
Well, this is my next question, actually. So,
Huh.
because I wrote some scenarios I wanted to ask you about. And these are real life scenarios I see and talk to students about. So, here's my next scenario because I think this stops a lot of people from pulling the trigger. Someone finds a facility, maybe it's 30,000 square feet, decent occupancy. Again, let's say the deal checks out, comes with an extra acre or two, and the market it has a low supply index. So it's a no brainer to expand this thing, add another 10, 15,000 square feet.
Absolutely.
Here's what the mindset of the first time buyer or even multiple time buyer owner, they brain freezes in this regard. So I want you to help unfreeze it. They look at their bank account, how much cash they have, and they go, I can afford to buy the facility or I can afford to expand it, but I can't do both unless I go get all some sort of JV, creative financing, seller carry, everything. And if they can't work that out, they pass on the deal. What do you say to them?
So this is another aspect of SBA that's so groovy. You can skin this cat a couple different ways. You can do an acquisition and expand right away with this sweet little thing that I can bake into the deal called working capital. So I can bake in working capital. It could be just for improvements, new, new concrete, painted doors, updated technology, new website. Fine, that's one way to do it. Or if there's extra, let's say it's grass on the property and you really want to pave that and turn it into boat and RV parking, no problem. Again, working capital. If you want to add a construction component onto the loan, that's just called an acquisition loan with a construction component. And then I will definitely talk to you about if you can really only afford the 10% down on the acquisition today, but it does include room for expansion on the property. You can come back to me in 12 months. And as long as your ownership has stayed the same for those 12 months, your business is healthy, debt service coverage looks good, 1.25 or better, I can do 100% financing for your expansion, which is then a construction loan. Okay, so now we can add construction on. We've not put any more money into the project. You could also pick up a facility down the street and do an acquisition with
Well,
100%
hold on.
financing.
I
So
asked
now we're
one
talking
question.
about building a portfolio using
I
the
asked
SBA.
one question and I got 3 answers. So
Creative
I can
financing.
I can buy it's yeah, the SBA is creative financing. I can buy a facility, and what I just heard you answer, and I didn't even ask, but I'm so thankful you answered it, was I can wrap my CapEx projects in there. I don't need to reserve for CapEx. I can wrap
You
that into
don't
the
need to
loan.
reserve for it. That's right. We can include everything you need.
I didn't even ask that, but thank you. 2, I can buy it and expand it day 1,
Yes,
assuming I have enough cash for the part of the expansion. Maybe
all
it's a
that.
little more than 10%, whatever, we could look at that. Or
It's
if I
probably still going to be
don't,
10%, but now it's 10% of a bigger number.
okay, but you could do it.
Absolutely.
3, let's say I don't wanna expand right away. I
Mhm.
just wanna get in here and operate this thing, and I heard you say, "Wait 12 months, expand it later." And when I expand it later, it's 100% financing?
Absolutely. Yeah, as long as you meet the 3
Okay.
criteria we talked about. So you have to have owned it for at least 12 months. It needs to be cash flow positive, at least 1.25 on the debt that you already have. And then your ownership has to match identically. So no changes. So if you buy it, if you start out with partners, whenever you do a future expansion, whether it's via acquisition or construction, you are stuck with those partners, essentially. Ideally, because you're doing SBA, you're by yourself. You don't have partners, right?
Yeah, alright. So wow. Alright. Um, folks, you're probably gonna wanna listen to this episode twice, or at least rewind it, because there's a lot happening here. You mentioned something about building a portfolio. Let's unpack that.
Yes.
Let's say a borrower gets their first deal. Maybe they own 2 deals, whatever, and they want to grow. You laid out something, or you were talking about something I thought was compelling about building a portfolio using SBA financing.
That's right.
Unpack that for us. What are the different ways that can work?
So let me start by saying this. I have some savvier investors that will come up to me and say, Anne, why do I want your SBA dollars? I can put 30% down on a facility. And this is how I answer the question.
Yeah, good point.
You've got a chunk of money. If you preserve it and put the least amount in to your first project, or it could be your fifth project, you now have cash to go do, you can deploy it elsewhere. You don't have to sink it in at all whatsoever. And you can continue building and or you can continue adding on to your self-storage portfolio with the least amount of money. So you're going further faster inside storage. And if you can do it with 100% financing, you are winning the game. And I
So
have customers.
let's use a real example, if because
Mhm,
I like numbers. $1 million. Let's say I've got. I was going to say 300, but there's closing costs involved. So let's say I've got
which will include, we're going
three.
to include all your closing costs, your SBA guarantee fee, and your working capital in your total project. Your equity injection is 10% of that total.
Okay, I've got 300. This keeps getting better. I got 300 grand. I could put that. You used an example of, and I've got 30% down. Why do I need your stupid SBA loan? I'm that guy who says, why do I need your stupid SBA loan? You say, Joe, how
Right.
much money do you have? I got 300 grand. I'm going to buy this $1 million deal. To which you say, why would you put 300 grand into that $1 million deal? Why not put 100,000 in? And then what?
And then go buy two more and
Gotta buy 2
or
more.
go invest the extra 200 someplace else and just do 100% financing and slowly build a storage portfolio. If you want to
So,
grow within 12 months, you are going to be doing, putting more equity into new deals.
so break the 300 up over 3 deals. Now I've got 3 deals.
And
12 months
you have,
from now, what can I do?
you have three properties. Guess what? You just diversified your investments.
And am I right in assuming that I can then use an expansion loan for all three?
Absolutely.
And I don't mean when I say that, so we're clear, because I heard you, it doesn't mean I need to expand that facility with another building on the same lot.
That's right.
I can, correct me if I'm wrong, can I go buy another completely different facility, let's say in the same market or nearby or something
You
like that
can. You
with
can.
100? So I can turn 300 grand after 12 months. If I'm successful buying 3 facilities with 300 grand, I could turn that into 6 facilities with the same
Absolutely.
300 grand.
Yes. You can turn it into 10 facilities. Yes. Now, we want, if you're doing it via acquisition, we want your portfolio to be somewhat like size and kind properties, right? So if you have 100 doors
Yeah, I
and
don't think
you
anyone should
find
be
a facility
complaining.
that's 500 doors, the bank could say, "Oh, we want you to put a little skin in the game," but it's a big choice at
And
that point.
these are all acceptable to me. It's like when I'm on AI, which I use a lot, and it's taking minutes, not seconds, and I get frustrated. It's like you have to catch yourself, go, wait a second, this is doing some amazing stuff here. Slow your roll. To that regard, before you get all defensive about what you have to do in the rules, like, oh, it's okay. What you're providing is incredible. You can't get it anywhere else. So
You can't
yeah,
get
if
it
I got to
anywhere
go
else.
buy,
It's incredible. And I have witnessed, and all the lenders on my team have witnessed people creating huge portfolios with very little money into it, and
just by
nothing makes me
following the
more proud.
rules, staying within
Phenomenal.
the rules in the game and playing the SBA game and
It's
follow.
not that hard. The rules aren't that hard to follow.
All right. This has been incredible, but
Oh gosh,
and
now you're gonna ask me hard questions.
well, look, there's an elephant in the room that has to be talked about because I promise if I go into any real estate room and with a I love SBA shirt on, for instance,
Yep.
someone's going to walk up to me and say, "Yeah, but it takes forever to close. They suck. It takes 6 months to close your deal. I mean, you lose your deal, but before you can even close the loan." And I'm not making this up. I've heard that. I
I
don't have
know. I
I love
know.
SBA shirt. I have been everything else I've said has happened to me. So
Yes.
what do you say to that? To
Okay.
the folks
My
that tell me how much
number
the
one thing
SBA
I'm gonna
sucks?
say is work with a lender that knows self-storage, because a
What is
deal can die on the vine, whether it's conventional or self-storage, excuse me, whether it's conventional or SBA, if your lender doesn't understand storage. Okay. So that's the number one thing I say is find a lender. I mean, please call me. Find a lender that understands storage, whose credit team understands storage, whose underwriters and closers understand storage.
how do I know?
You ask questions. If you're going to a local lender, you ask. If you're going to a credit union, you say, how many self-storage deals have you ever done? How many have you closed? What's the dollar volume you've closed? Those are really important questions. If they've done one, I wouldn't have a lot of faith in that. You really want somebody that knows what questions to ask, knows how to present your deal to credit, knows what debt service coverage we should be looking for, knows what the red flags are. Like I can look at a seller return and say, this is beautiful. I would make an offer on this myself, or I want you to run as fast as you can away from this deal. So that's really important. You don't want your deal to die months into the process. So that's number one. Number two, Live Oak prides itself on doing SBA loans better and faster and smarter. We're going to get you through that paperwork slog by asking you for everything up front. So as long as you can sit down, take a couple hours and give us the documents we need, we have a lot of integrity around our application process. We're not going to just keep asking for things indefinitely. I'm going to give you a list up front of everything I need. And it's a matter of how quickly can you get that to me. And then similarly in closing. Closing, people always complain about closing, and this goes for conventional because we do conventional as well. This goes for conventional and SBA. People complain about closing and they say, how fast can I close? And my answer is we can close as fast as you can get us all the documents, right? It's a commercial loan. It is, attorneys are involved. So
Let me
have the
ask the
right
hard.
expectations going into it. It's not a
If I'm a
residential loan.
good if I'm a good borrower, yeah, sticking commercial to commercial, conventional to SBA or whatever. If I'm a good borrower, checks all the boxes, I've got my docs ready. I respond to you when you ask, what is a realistic timeline? For the guy who says six months, does it take any longer than conventional?
It should not. My company, I cannot speak for other SBA lenders. I can close your SBA loan in 60 days. That's a very normal timeline.
That's absolutely a normal timeline.
You and I both know, because you knew the borrower, I closed an SBA loan in 2025 in 15 days.
Which is unheard of.
That's not the norm. But that person had all their ducks in a row, and then their bank left them at the altar. And if they didn't close in 15 days, they were going to be out their money that they had put down. I, my, we're structured in such a way that I was able to make that happen for this borrower. So I was the hero. It was felt so good. 15 days. Please don't call everybody. Call me and ask for a 15-day closing. 60 is what we like to ask for. On the 7A side, 504 loans, so there's really two products under the SBA loan program, 7A, 504. 504 side, we are working in conjunction with the SBA, so I would allow an extra 30 days at a minimum. So 90 days on 504, 60 days on 7A. And I would say this too, ask your lender. If you're not calling me and you're working with a credit union or something like that, ask them what they think it's going to be and get it in writing.
Yeah.
And if they're not willing to give it to you in writing or make any kind of commitment to you, that's probably not the right bank for you, because time does kill deals.
Folks, I don't know about you, but this has been one of the more kind of mind-blowing podcasts I've had the pleasure of hosting. If you've been sitting on the sideline because you didn't think you had enough capital to get in, or you found the right facility but talked yourself out of it because you couldn't fund the expansion, or you've been so busy engineering complex deal structures that you forgot to look at what's right in front of you, I hope today was a wake-up call. The SBA isn't sexy. Nobody's building a brand around it
It
on
is
social
sexy. What are you
media.
talking about? Tell you what's
Beauty,
sexy about the SBA is being able to buy a deal by yourself instead of having to have partners. That's
you're
sexy.
not wrong. That is sexy. Beauty's in the eye of the beholder is what I was about to say. But it's very quietly reliable, and for a lot less complexity than most of the alternatives. It's the original, in my opinion, creative financing.
Yes.
It just doesn't get the street cred. And
So can
thank
I
you so much
add?
for being here. How can people reach you? Because frankly, if I'm listening, I don't want to find out how experienced another bank is. I probably just want to call the number one lender for SBA loans for self-storage. So
Thank
how
you.
do I
I
go straight
appreciate
to
that.
you?
Email is the best way, and even if I'm on the road, which I am a lot, I just give out a link to my calendar. You can book you can book a meeting with me. It's that simple. So, do you want me to
But
say
yeah,
my email
we'll put
address?
we'll put it in the show notes. But yeah, just give it to
Okay.
people
So
driving or
it's
whatever.
Anne, ANNE. Make sure you don't forget the E. Dot Mino, INO. Very simple. At Live Oak, just like a live oak tree. It's liveoak.
Anne dot Mino MINO at Live Oak Bank or Live Oak dot bank.
Liveoak.
Live
Bank.
Oak dot bank. Live
Very
Oak
important.
dot bank. We got to get that down. Amazing. And to everyone listening, go run the numbers on your next deal with what you learned today. You just might surprise yourself. And before I let you go, is there anything, if I reach out to you via email, is there anything I should have ready to go to help make the call more productive when we
Yes,
do meet?
and
Or
let me
you'll
add,
email that to me,
I
right?
will
I'm just
email
going
you exactly what I need.
okay.
I'll make it very simple, and let me say this too, our minimum loan amount is 500,000, so if you're under 500, we're just not built for that. I can go up to 20 million, so that's our sweet spot, 500,000, 20 million, and we do consider turnaround acquisitions. Most of the acquisitions I'm doing right now are considered turnarounds. If you don't know what that is, call me, we'll have a
Afraid to
conversation
ask.
about it.
All right, perfect. We'll leave a little intrigue. And Mino, Live Oak Bank, thank you so much for being a great guest today and espousing just incredible wisdom for folks that are probably listening and trying to figure out how they get into their first self-storage deal. So
Thank you.
thank you
Thanks for
again for
having
being
me.
here, and we'll see you next time.
Sounds great. Thank you.